And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 12/6/21. And of course, a regular on the show is our good friend, Charles Nenner. You find him at charlesnenner.com, a really incredible cycle student, a student of cycles, and pretty good forecaster in his own right. Charles, great to have you back on. It's been a while.
Yeah, it was time again, and a lot is going on.
Lots going on, lots going on. Hey, the last time we had talked, you had mentioned that there was going to be, or maybe it was 2 times ago, a second COVID wave. That has come and gone. Now we're on the 3rd or 4th wave. Who knows if it's ever going to end? It seems to be that it's pretty much endemic, doesn't it?
Yeah, it's and the fear is that other viruses are going to come up also. And the problem is that it has to be a global world. So how are you going to stop it? It's very difficult. They stopped flying for 1 week, 10 days. Everybody is objecting, and they opened the airways again, and here we go.
Yeah, well, we know once a upper respiratory virus gets in the wild, there really is no stopping it. As noble as the efforts might be to try to stop it, it's really like trying to dam up Niagara Falls. It might be a good idea, but it just isn't going to work. But in the meantime, we're living in the real world. Stocks, we had a hit. You mentioned you were out of stocks prior to the correction.
Yeah, and yesterday we started buying 3M and Facebook because we had been watching that for a cycle low, and it corrected a lot, and it hit up downside price target. And the next one we probably look at is Carnival Lines. So that's interesting because Carnival Lines is very dependent on the situation with the virus. And we have been playing that a couple of times, and right now there's another cycle low in Carnival Line. So maybe it's not going to be as bad as people think.
Yeah, well, people are still going to travel. I think what I see now, I'm in Florida, granted, so it's a little different than the rest of the country, but people have kind of just learned to live with this, try to mitigate the risk, get vaccinated if they think that that's the best choice of it. And now there are therapeutics out there that have been pretty effective in dealing with the virus. So people feel like time to get back to living a normal life. So
Right. But I still think most people will not go on a cruise because it has happened a lot of times that you get stuck because there are 1 or 2 cases, and then you have to stay on board for a couple of weeks.
Yeah, Voyage of the Damned. That's what I likened it to. But hey, so the stock market took a big hit last week, and is it going to come roaring back is the question.
Well, very short term, we're talking about the 6th of December. We're expecting a rally for a couple of days. Then maybe one more time weakness into the middle of December, and then another rally. Longer term, it doesn't look great. Longer term cycles are down. So we're just working with short-term cycles. And like I wrote also this morning, we have no downside price target. So for now, this is a short-term correction, but it will turn into a longer-term correction next year.
All right. Next year is the year, 2022.
Right.
What about bonds?
Bonds is interesting. We're playing short-term the bonds, and on contrary what everybody thinks, we expect a real tradable low in bonds in a couple of weeks. It seems strange because you got the stories about the inflation and whatever is going on, but we were out of the bonds longer term, I don't know, for a year or so, and finally cycles are close to a low. So I expect a bond rally starting in a couple of weeks.
So does that mean that interest rates stay low if bonds are going higher? Obviously, it means that rates are coming down.
Well, it could be that they run for the cover because the market's coming down. It could be that the conflict with China, whatever, is going to be more threatening. It could be all kinds of reasons why bonds go up.
Interesting. So people are seeking the relative safety of the bond market. And so interest rates then are really not going to do much, but inflation, you called it I think it was about a year and a half ago, before the pandemic, you were predicting higher rates of inflation. Here we are, by some measures, John Williams shadow stats, as high as 14%. The government's willing to admit it's 6%. What do you see ahead for inflation?
Well, as you say, I just have to go a little bit about the work we do. So we recognize cycles, and cycles actually predicting events that we don't know, but we're not interested in the event. We're interested is the market going up or down? So last time when the virus started, we were out of stocks and we saw it was going to go down 40%, and that's what happened. This time the cycle topped, we were out of stocks, and then there came the new virus. And then very long-term cycles, we're talking about 30, 40, 50-year cycles on inflation are bottoming. So now, of course, you can say it's because this happened, that happens. That is just the media. But longer term now, we have seen a low in inflation. And I'm sorry to say, but for the next 20, 30 years, you're going to have high inflation that could go, up to 20% in the end.
So we have this commodity called Dr. Copper, and we're going to talk about commodities, precious metals. But copper is the ultimate indicator, perhaps, of economic health and trends. Back in March, April of last year, all these so-called experts in the media who've been wrong about everything else said, oh, copper is going higher because the economy, the global economy is getting better, China's getting better, so don't worry about anything. And as it turned out, copper was going higher because of inflation, commodity price inflation, producer price inflation, all these things. We're going to see Dr. Copper flashing warning signs about more inflation?
Well, we were short in copper, and we have a short-term low, I think, in a week or 10 days, a short-term low. But for instance, natural gas, when we sold it around 650, it came down already 50%. And you don't know why that, maybe it's known why this happened. First the run up and then the crash of natural gas. It's very important because where I come from in Europe, the factories that had to close down because they couldn't afford to pay for the natural gas anymore. So that influenced the whole economy. So why these things happen, I leave it up to the pundits. The only thing that my work says, if something goes up, when does it go up? When does it go down? How much it goes up and how much it goes down? I pick up here and there from big institutions that I work with what the reason behind it is. But I'm not sure that that's the real reason.
Yeah, they're never really going to tell us. But nat gas, perfect example, hit 650, and you've always called it the widowmaker. And this time it didn't fail to deliver because now, it's around 4.5. But what's interesting is copper, all these commodities go up, way up, parabolic, and then they crash. Almost predictably, they crash. But they don't crash to pre-parabolic levels. They're still 40, 50% higher than they were, or even 100% higher before they went parabolic, which means they're making higher lows, which we can learn something from that, can't we?
Yeah, also in a couple of weeks, the cycles on grain bottom again. So food prices could also go very high, which usually means is live cattle is also going up because, the food becomes more expensive, which means is that your hamburger is going to be more expensive, et cetera, et cetera. So we're in for a very volatile situation.
Yeah, well, I'm more concerned about my filet mignon, but that's becoming unaffordable. So I think I'll do what the economists do, call it substitution, and I'll switch to spam, perhaps, although the price of spam's probably going higher too, no doubt. So we look at precious metals. You would think inflation's out of control, they'd be going higher, but you would be wrong.
Well, again, the work of my cycles is that it doesn't always work with the reality. It works with interpretation of reality. So there's still a lot of people out there that think inflation is temporary. The cycles show you when most of the people say, hey, maybe it's not temporary. And that comes in a couple of weeks. So we're getting ready for the new bull market in gold. That's going to start by the end of the year. What is going to trigger it? Only maybe the perception that things are not as good as they think.
Yeah, well, I find it fascinating because oftentimes you could be seeing these trends, but you could be too early. And there's a saying on Wall Street, there's nothing worse than being right at the wrong time.
Right. So one of the things that we really help the institutions with this, let's say institution says, I just come with an example, I want to buy IBM, and they don't know if they should IBM buy it this week or buy it next week. So then we build a cycle, and then they don't have to wait for half a year until they get the results.
Mm-hmm. Yeah, it is kind of fascinating to see how these things work. So natural gas, oil. Obviously, in the U.S., we haven't had the parabolic move that they've had in Europe. Now, in Europe, it looks like you're facing a above average, colder than average winter. Intuitively, you got to think the prices are going to go higher still.
Well, the funny thing is we do wheat, corn, we do soya beans, we do lumber. And my computer model has no idea what the weather is going to be in the next couple of months, but still it's correct. So I can't explain how this works. It's a mystical thing. So I guess, whatever the weather is going to be is already in the price.
And you think nat gas is going higher from where it is now?
No, the weekly cycle is down and it's still down. So it's going to take a while until this thing moves up again.
Okay. Yeah, we hadn't seen prices like that in the U.S. And so much of life's necessities, it used to be oil that we only looked at. But nat gas has become a substitute for oil as well. Its importance to the economies, both U.S. and global, has gone way, way up since the oil shock of the 70s, but nobody really reports on that or really gets it. So oil, same deal, right? So we're consolidating. It crashed last week, and we're still heading down there, huh?
Yeah, cycles the bottom again by the end of the year.
End of the year. So 2022 is going to be quite a year ahead. Anything else that we should be looking at terms of markets out there, in terms of opportunities that might be there that are overlooked or ignored by the vast majority of investors?
Well, I'm always afraid to, in an interview, to mention the buying or selling opportunities. So as you know, is your clients can sign up for 4 weeks for free. And even if they like it, they can get a 50% discount. I prefer them to watch what we're writing every time, because I might say something and it doesn't come across clear, or we change our mind in 2 months and we don't talk in the meantime, and people are unhappy. So I prefer them to watch our research, which they can get for free for 4 weeks.
Hey, and I remember one other thing you mentioned the past several times you were on. For years you've been talking about it, and that is buying small apartments and houses, renting them out, right. Short-term rentals. If you had followed that strategy in Florida, you probably would have made about a 500% return in the past 2 or 3 years, following exactly what you said.
Yeah, and most institutions that I work with is exactly what they did. All over the world, they bought small apartments. But the cycle is up for another half year, 3/4 of a year, and then we have to see what we're going to do in order to safeguard the prices. So there might start to be some selling later next year.
Yeah, well, selling can't come soon enough in Florida. There is literally, Charles, nothing on the market. I follow the local real estate market, state market. There's nothing. And in these low tax, I might put in quotes, high freedom states, the same thing's being repeated. Tennessee has no state income tax through the roof. But even in the high tax states, real estate is still through the roof. So is it a question of cycles, or is it just a question of interest rate cycles?
It's a good question. I really don't know. I mean, I could say something about it, but probably other guests know much more about it. Again, I educated myself to be busy with what happens and when it happens, and not why it happens, because that doesn't make a lot of money for people why it happens. That, you could be right, you could be wrong, you could be late, you could be early. I don't focus on that.
Yeah, well, it's a bit of an intellectual pursuit that probably has little or no value, because in the end, you either make money or you lose money, and you use your judgment. And the more you can calculate the cycles, the better off you're going to be in the long run, for sure. Certainly as a trader, I find it fascinating. Facebook, 3M, and Carnival Cruise Lines, your three top picks for now. So I suggest you all go over to Charles's site, charlesnenner.com, Nenner. Get your free trial. And if you like it, subscribe like me. And if you got a question for Charles, please shoot me an email. Next time he comes on, we'll have at least 10, 12 questions. We'll do a Q&A with you, Charles. Really appreciate you coming on. And be well. We'll talk to you again real soon.
Yeah, don't let them not forget to say that they come through you because they get a big discount.
Oh, yeah. Mention Financial Survival Network so you can get a discount. I've been following Charles's work for the better part of a decade, and I can tell you, might not be right 100% of the time. I don't know anybody who is, but he's definitely more accurate than just about anybody else out there. Charles, always a pleasure. Thanks so much.
Welcome. Bye-bye.